Hello everyone, welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of December the 26th, 2016. Now, to begin this week, we're going to start where we always do with the US dollar index. Very important in all of our trading, whether you're trading Forex, commodities, stocks. The dollar plays a part in all of that. So when we look at this week's going forward, we can see that as per the last several Forex Weekly Outlooks, we've got a trend line break with a VantagePoint, fresh triple EMA cross, but we've got some pretty heavy resistance here that the dollar currently has to deal with. Now, that resistance level comes in at or about the 103.50 area. We can see that in this area all up here. Now, our key vantage point level that we want to watch for next week is 102.03. In order for the dollar uptrend to remain in place, we need to hold above that key vantage point level. Now, our indicators are warning that the dollar may not be as strong as what some of the analysts are saying. We've got our medium term crossing over our long term predicted difference, which basically what that's saying is that the medium-term trend, which is clearly up, is weakening against the longer-term trend. So it doesn't mean that we're going for a trend reversal per se in the dollar index, but it does mean that the dollar is probably going to struggle here. Now, we can see the last several days the market's been running along the vantage point key 8-day predicted moving average at 102.72. Our neural index has gone back from a 0 back up to a 1. Our predicted MACD is basically running sideways, and our predicted RSI also running sideways in somewhat overbought territory. So the dollar is going to have a little bit of work ahead of it next week. Now, during the Christmas holidays, this will be the final weekly outlook until we get into the new year. I don't expect a lot from the markets next week. I think that they're going to be thin, choppy, and illiquid, and really we should be limiting our trade. But for now, the dollar index is contained to the 103.50 area, and some of our shorter-term indicators or our medium-term indicators are warning of a corrective move on the dollar, potentially back into this 102.03 area, where of course, at least for now, we would still be buyers. Now, the global equity markets basically all look the same here, guys. The S&P 500, we can see it getting very toppy here above 2260, essentially just riding right along this vantage point 8-day predicted moving average. Now, this is a great trade, and again, this is a trade that I talk about in stocks, indices, commodities, Forex, basically using the vantage point critical levels as pivot areas to buy from, or sell from. So in this case, 2239, the market's been holding above 2256, the 8-day predicted moving average. If we get a sustained break of 2256, we are likely going to target this area here at 2239. Now, the problem with the equity selling off here is I believe that, or at least the market believes in the US, that the tax rate is going to change. Capital gains is going to change under Trump. That may or may not come to fruition. So I think they're going to hold their long positions and their profits and wait to cash out probably until sometime in January. So I'm not sure we're going to see a breakout on the S&P or any of the other global indices, but I think they're going to remain firm. Now, longs still carry the edge while above 2239, but if we get a sustained break of 2239, and I do anticipate this area to be tested by the end of next week, if that area holds, then we could see a move higher. But if it doesn't hold, then we're likely looking at a more significant corrective move. Now, with the DAX, you can see we're getting very toppy. Looks almost identical to the S&P 500 chart, as does the Nikkei. So again, the global indices, not just the S&P 500, are getting toppy right across the board, and that's what we need to watch. Now, as we come into our main commodities, light sweet crude oil, I've talked about this level here for several months here, guys, and that's right around this $54 per barrel mark. Now, oil does play a big part in, of course, not just the direction of the dollar index, but also the Canadian dollar, Aussie, New Zealand, and even the British pound. So when we look at this right now, our key vantage point level is 51.91. So we're basically trapped between the level that I talked about of the $54 mark down to this 51.91. Now, this is a very tight range we're playing here. Only a sustained break of one side or the other is going to give us our next move in oil. Now, there's a lot of things going on with OPEC, and again, Trump is talking about, fighting with OPEC. So I don't know what's going to happen there. I think that oil will probably move a little bit higher in 2017, but I think it's still going to be contained to a fairly tight range, probably between $65 and $45 a barrel, but it's a little too early to be going down that road just yet. The key level we need to watch, 51.91. As long as we hold above that, longs carry the edge, but if we break below 51.91, we're going to probably move back into this lower trend line area that I've identified right around $47. There's a 50% chance that could happen prior to Q1. Now, looking at gold, and again, gold, basically the bulk of the gains with gold came after the Brexit or leading up to the Brexit. Classic case of buy the rumor, sell the fact. So we've got Brexit, we got a big push up in gold. Gold has done absolutely nothing since. Then on top of that, we finally broke this range at the lower part of that range at 1255. We're aggressively moving lower now. Once again, the critical vantage point levels that we need to watch, I'm just going to zoom this in a bit here. But before I do, I first want to point out that we were in almost the exact same situation here last year. The only difference is the Brexit vote. So last year at this time, the Fed talked about hikes, but the dollar sold off anyway. And you can see that gold essentially moved up aggressively leading into that Brexit vote. Then essentially gold sold off. So I don't see any real event risk in 2017 other than Trump. So we don't know what he's going to do, what he's going to say. A lot of talk back and forth, a lot of garbage talk back and forth between the current administration, Russia. There's a lot of things going on here, but this is an outgoing president, so I'm not too concerned with on a geopolitical standpoint on any of that stuff. I want to see what Trump's policies are. We've got to look at that after January the 20th, and we can reassess from there. But for now, I think that gold definitely struggling here below those key vantage point levels. When we bring this up, you can see that again our key level is 1154 followed by 1138. Now the market's been following this vantage point 8-day predicted moving average very, very closely. It hasn't been able to get above this area, this medium colored blue line here. You can see it's banging up against it and failing every single time. So for gold to turn around, we're going to have a break above, at the very least, 1138 next week, followed by 1154. If we break above 1154, that will take the pressure off the downside, but right now I think that's very unlikely. Now, the one currency that does follow gold very closely is the Euro-US pair. As gold moves lower, it's pulling the euro down with it, or vice versa. We can say the euro's pulling gold down. Either way, right now it appears that we have a short-term bottom in place here. I'm just going to zoom this in so everybody can see this a little clearer here. Once again, that critical vantage point level 105.22, 104.52 followed by 104.38. These are all of your upside positions, and what I clearly want to point out here, guys, is that all of this is being done ahead of the market. We're waiting for the market to come to us so we can buy or sell. So in the case of the euro, if we want to sell this, we're looking for it to move up to 104.38, 104.52, or in this particular case, 105.22. So as long as we're below 105.22, shorts carry the edge. Now our upper trend line is coming in there also around 106. Indicators from VantagePoint are concerning, to say the least. We have our medium term crossing over our long-term predicted difference. That's formed a bottom right here at the 103.50. So I think we're going to, for the remainder, the likely outcome from Euro-US for the rest of 2016 is to play a range between 103 and 106, or potentially we may not even get above this key vantage point 18-day predicted EMA at 105.22. But the critical thing to understand is that we know these levels ahead of time. So we're pointing to these levels, selling into 105.22. That is absolutely a reasonable play on a corrective basis with stops above the 106 area. So watch those levels very, very closely. Now with US Swiss franc, same deal here, guys. This basically is a Euro-US trade. Now what I want to point out, back in the levels that we're seeing right now in Euro-US, if we cross-reference that to US Swiss franc, that would actually put US Swiss franc at about the 130, 140 level. So the Swiss franc is still the stronger currency between that and the euro, no question about it. So we're in a very tight wedge formation. Our critical vantage point level for next week, 101.91. Buying down to this level is a reasonable play. We've closed at 102.58. Currencies, guys, move within about 100 pip range every day. That's usually about 1% of their value is where currencies move. So identifying those critical levels ahead of time allows you to pinpoint an area to buy or sell from. So in this particular case, significant resistance above 103.50, very significant resistance, but we also have very significant support sitting down here at about the 101.90 area. You want to know your levels and whether you're a buyer or seller. That's what we want to know here, guys. That's the most critical part of trading, is to know critical levels. Don't just jump in there and guess. We want to look at these indicators and say, okay, are we a buyer or seller of this particular pair? Right now, we have a problem on this particular pair, much like what I pointed out on Euro US. You can see here, we've got the medium term crossing over the long term predicted difference, but we've got a very mixed signal here, potential crossover on the predicted MACD, and we've got a flat RSI. So if US Swiss franc can break above 103.50, break through this trend line, hold above this key vantage point 18-day predicted moving average and the 8-day predicted moving average, excuse me, let me just correct that so everybody can see this, holding above this 101.90 area and then ultimately pushing through the 103.20, 103.40 area, then if we can get through that area, then we will see a significant rise in this pair. But if we can't get through 103.50, then we could see a corrective move, much like what I've pointed out at the beginning of the video with the dollar index. It is pointing towards a potential corrective move, possibly a trend reversal very early, way too early actually to even call whether we're going to have a trend reversal on the dollar yet. We won't know that till the first quarter into the second, third week of January. But for now, these are the critical levels to watch next week on the US Swiss franc, and the market will come to both of the levels that I've talked to, again, ahead of the market. Now, as we go into the British pound US dollar, it basically succumbed to the US dollar strength and the weakness. Some of the data out of the UK, not that great last week. So a good call from VantagePoint here on that triple EMA cross on this trend line break. So it's very important to know how to draw your trend lines on using the VantagePoint software, because combining the two with the neural index, the predicted difference, this can lead to an absolutely fantastic trade. So we look at that triple EMA cross, we connect it to our predicted differences, we connect it to our crossover and our predicted MACD, and we connect it to the break of the 40 level on the predicted break of the 50, but more importantly, the break of the 40 line. Now, you've seen how I've set up my VantagePoint charts with the 40-60 split. And again, the reason for doing that is I'm not interested in using the RSI as solely an overbought or oversold. I'm looking to basically momentum is what I see. So when we break through 40, we get momentum. You can see here when we broke through the 60 level in a triple EMA cross, same thing, we have upward momentum. So for now, the British pound could be heading towards that critical 119.15, 119.20 area, where at that time I think we would still be buyers of this pair. I think that the pound will recover in 2017. Nothing goes straight up and nothing goes straight down. The pound clearly has taken a beating in 2016, but often in cases like this, guys, the very next year it goes the other way. So for now, the indicators are a little bit mixed here, and once again, I'm watching that medium-term predicted difference crossing over the long-term predicted difference more to the upside. So once again, a warning sign that we may not have a lot of downside potential on this particular pair, but we will monitor it very closely. Now, with dollar yen, you can draw this, and if I split the screens, this actually looks just like the Nikkei or the S&P 500. So essentially, guys, if the S&P 500, the DAX, the Nikkei, the global equity markets sell off, then the dollar yen will move lower. With my own direct clients, I've had them shorting this thing for the better part of the week. It's done quite well, but the problem here is we have significant support, which has blocked any major move to the downside. The 8-day predicted moving average from VantagePoint. You can see if the market hits a certain level once, or maybe even twice, it's a coincidence. On the VantagePoint 8-day predicted moving average, the market hit this 4 of the last 5 trading sessions. So this is not a coincidence, guys. Now that can be viewed in a couple of different ways. You can see that I've drawn a straight horizontal line across at 118. The market's not getting through there either. So that tells me that we're probably getting ready to break through that all-important 8-day to test this 115.65 area, this VantagePoint 8-day predicted moving average. Now the only way that this will happen is if we break through, close below this 117 area for a couple of days in a row. Once again, guys, nothing is late here. Everything is ahead of the market. So these levels are critical to understand where they are. So you can see that the market is being contained by that 8-day predicted moving average. We break that, we have a strong possibility, I should say, of going to the 115.65, at which time the uptrend could absolutely resume. But it could also be a trend reversal here. So be very, very cautious with this pair, particularly in the end of December. Now, the additional indicators from VantagePoint, they would support the latter of what I've suggested, that the downside is likely to prevail. We've got a crossover on the predicted MACD. We're heavily overbought on the predicted RSI. The neural index is down, and our differences are all moving lower. So if nothing else, I would say we are looking at a corrective move lower, but we must break through 117 and close below that level, guys, for at least 2 days in a row, in my respectful opinion. Now, as we come into US Canada, now this one was an absolute fantastic trade last week off the open. And once again, I very clearly last week outlined that the 18-day predicted moving average last week was 132.99. We're buyers down into that area. So the market moved up and down on Monday. Then it crashed down to about the 133.10 or 132.10 area, excuse me. And then it proceeded to move up by almost 200 pips to close the week at the 135.37 area. So once again, understanding this weekly outlook, understanding the indicators from VantagePoint, we're simply looking for an area to pull back. We're not just going to buy off the start here on Monday. We're looking for the market to pull back. If we want to buy something, we want it to move lower first so we can buy it. You know, we don't want to necessarily sell down to that level because we would be strongly counter trend against this triple EMA cross. So once again this week, I'll outline the same levels I did last week: 133.59, 133.95, and 134.88. So this is your first level of a potential long. The 8-day is your second, and the 18-day is your last line of defense at 3. So hopefully I'm a little clearer this week. You know, so if some of the more inexperienced traders can understand this better, then when we look at these are all downside pivot areas that we want to look to go long off of. We've got a trend line break here, right or just under that 134 area where basically we broke here and moved higher. But we still have some very significant headwinds up here, and that's going to come in on this bar right here. That's going to be right about your 135.86 area. So if and only if you were wanting to try counter trend shorts, then the area I would suggest to do that would be around 135.86. Now, case in point here, the VantagePoint medium-term predicted difference crossing over the long-term predicted difference to the downside. Very interesting signal here from VantagePoint. I'm not sure I necessarily agree with it at this particular time, but I will point out this level that if you're to attempt shorts based around that signal, just below the 136 area or just above, that's the area, 135.80. The swing high, your order flow guys are going to be watching these two areas very, very closely. And they come in about 135.70 and about 135.85. So watch this area very closely. If we break through 136, we have a real shot at moving back towards that yearly opening price at or about the 138 area. My year-end target on this pair was 138. We're within striking distance of that, but we have to get through the critical resistance at 135.86. So it's very, very important, guys, that we know these critical levels and we can react to them. So if we, not only is it a potential short up here, but if we break through there significantly, it's going to be a very, very good long trade as the market moves towards the 138 level. Now, moving into our final two pairs, these two pairs are going to look very, very similar here. And once again, guys, I have talked about this repeatedly here on Trader Planet, clearly identifying these levels. The Brexit bar on Aussie US and New Zealand US, they were the only two pairs that actually, they were the final two pairs to fall in this particular range. Now, this lower bar here that's coming in here, this lower support area, this could be it for Aussie US. We could see a turnaround at this particular point. Now, that would come in about the 71.50 area. So when we look at the indicators, first of all, I wanted to back it out far enough so everybody can see, because you'll remember what I've said here on Trader Planet, that if we have a sustained break of the lower part of this Brexit bar, you want to sell right away. And that was a fantastic trade. And again, I gave that to everybody well ahead of that move ever happening. So this is our critical level right now we're looking at. Down here about 71.50, we're approaching that area. We want to be very careful with continuing shorts down here, guys. Now, our indicators are incredibly mixed. Our medium-term crossing over a long-term predicted difference. Neural index is still down, but my concern here, it's not very often that I see the predicted RSI at 11.8. Now, what I love about the predicted RSI is it's much different than a stochastic, where it doesn't overreact to the market. It doesn't move quick enough. It's slower moving. It is a momentum-based indicator. It's a leading indicator, not a lagging indicator. So it can give false signals, absolutely. But we are definitely in heavily oversold territory. Coming off that swing low that I'm warning you guys of, that's down around 71.50. We've closed the week out here at 71.73. So the key VantagePoint level here, 73.40. I believe we're getting ready to retrace back to that sooner rather than later. Maybe one more push to the downside. Then we could see a significant reversal. Now again, with Aussie US, if we look at this from a year ago, we can see that basically it was around the middle of January that Aussie US bottomed, and then the bulk of the gains in Aussie US came basically between January and April, where it topped out at 78, and then we're right back down to where we were. So you can see we're playing in, when we broke the Brexit channel, we're still getting hung up on this swing low. So once again, guys, longs could be a very viable trade just above 71. So remember, I try and put these levels out ahead of the market before the market even opens, so you have time to react to them. Now, with something like this, Aussie may not do anything on Sunday night. The market could open Sunday, and this pair could immediately spike higher. And the average person will be kind of looking at it going, geez, I don't know what happened there. Well, we're grossly oversold. I'm sure that anybody that's holding a short here is starting to get a little bit nervous, maybe wants to clean up their positions, and they're getting ready to potentially dump out of this pair. Now, if they close that trade, if a large number of institutional players close the short trade on here, it will artificially cause this pair to spike. And if it does, it's going to move right back towards this 73.40 area. So remember, keep an eye on that very closely. And the same this week is going to apply to New Zealand. Now, New Zealand continues to hold above the yearly opening price, but we did break through that Brexit bar, the one that I've talked about for basically the last 5 to 6 months. Okay, so we've played inside this range, false break, test of the bottom, it held, test of the bottom, it held, and now we're breaking through. So, some people will say, well, this is wave 1 of 2 of 3 of 4. That could be, but I don't think so. I think you're simply, we did not make any new real highs here. We tried to break out of the Brexit range. We made a new high, but then it failed. Then we came up, we made a much lower high, failed again. Then we made a significantly lower high here, and then we broke through the Brexit bar. So there's always a rationale, there's always an explanation, but going back to Brexit, that bar is the most significant bar over the last 6 months that we've had to deal with, and I've repeatedly said that. Again, when we look at where we are right now with New Zealand US, I'm going to zoom it in so everybody can see it. Once again, we have the potential for a fantastic long trade here. Medium term crossing over the long-term predicted difference in oversold territory. Predicted RSI at 19.3, so probably one more little push to the downside, and then we could be getting ready to turn around higher. But the trend is clearly down. I don't dispute that. So the key thing is to see when a trend is actually weakening. And in Aussie US and New Zealand US, there are indicators in the VantagePoint software that are proprietary to this program that are giving warning signs that we could be getting ready to turn on these two particular pairs.